Hey everyone, welcome back to Corporate Decoder, the place where we break down some really big company news. And I think today we have a situation where a company might just be singing a new tune. Algorhythm Holdings Inc. has just dropped a public report, and it looks like they've divested themselves of their singing machine business. Think about all those karaoke nights. Well, Algorhythm is handing over the microphone to someone else. Let's dive into what this actually means. The company, which sounds like it's all about rhythm and maybe some clever tech, has sold off a significant part of its operations. They sold their singing machine business, the home karaoke stuff, to a company called Stingray USA. This sale happened on August 1st, and the price tag was $500,000. Now, $500,000 might sound like a lot of money, but for a business operation, it's often just the starting point. This wasn't just a quick flip. Algorhythm sold off pretty much all the assets, contracts, and even the intellectual property tied to this home karaoke venture. That means all the trademarks, the designs for the machines, the customer lists, everything. What's interesting here, and this is where it gets a little more complex, is that there's a connection. One of Algorhythm's own directors, Matthew Peloquin, also holds a position as an officer at Stingray Group, which is the parent company of Stingray USA, the buyer. This is called a related party transaction. When people within a company are also involved in deals with other companies they are connected to, it's always something worth a closer look. It doesn't automatically mean something is wrong, but it does mean there's a potential for conflicts of interest, and the company specifically mentions that the board of directors, including the independent ones, approved this deal. Like most big deals, this agreement has a lot of legal language. It includes standard promises from both sides about the truthfulness of information they've shared, agreements on how things will be handled going forward, and how any problems will be sorted out. They also signed a transitional services agreement, which is basically a short-term contract for Algorhythm to help Stingray USA out with the business for a little while after the sale, making sure everything runs smoothly during the handover. So, the deal is done. The sale of the singing machine business is now officially complete. This means Algorhythm is no longer in the business of selling those popular home karaoke units. And to let everyone know, Algorhythm put out a press release on August 4th. This is a standard way for companies to share important news with the public, making sure everyone gets the same information at the same time. It's called Regulation FD, or Fair Disclosure. We're not looking at the press release itself right now, but it basically announced this sale. Companies often put their best foot forward in these announcements, highlighting the positive aspects of any significant change. Now, we don't have all the detailed financial numbers, like how profitable the singing machine business was before the sale, in this main report. Companies have to file those separately, sometimes later. They mentioned that pro forma financial information, which are adjusted financial statements showing how the company would look after the sale, will be filed later. The actual contract, the asset purchase agreement, is attached as an exhibit. Think of exhibits as the supporting documents for the main report. And then there's exhibit 99.1, which is that press release we just talked about. Finally, there's a 104 exhibit, which is essentially a digital file that helps computers and financial systems understand all the information in the report. It's like a scannable version of the document for the digital age. And to wrap it all up, the report is signed by Alex Andre, who holds a dual role as Chief Financial Officer and General Counsel. This tells us that the top financial and legal minds of Algorhythm Holdings have reviewed and approved this filing. So what's the big picture here for Algorhythm Holdings Inc. after selling off their karaoke division? Well, the immediate story is a clear shift in their business focus. By selling the singing machine business for $500,000, they're no longer diluted by a consumer product line that might not fit. They're no longer diluted by a consumer product line that might not fit their core future strategy. This could mean they want to concentrate on other areas, perhaps software, digital services, or whatever their main rhythm is. The connection with the buyer through a board member is definitely a point to note, and while it's approved, it always raises eyebrows and warrants extra scrutiny. On the fairness of the deal without the detailed financial statements, it's hard to know if $500,000 was a great price, or just a way to cut loose a Bullers was a great price, or just a way to cut loose a business that wasn't performing well enough. However, the fact that they're preparing pro forma financials suggests they are reorganizing their financial reporting to reflect this new structure. The key risk for Algorhythm now is executing their new strategy effectively. If they can redeploy the capital from the sale into a more profitable or growing venture, this move could be a very smart one if they simply pocket the cash or invest it in something that... Alright, that's our breakdown of Algorhythm Holdings' latest filing. What's your take on this sale and what it signals for the company's future, especially with that director connection? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.